The world is going through changes. Changes happening at a speed that we have never seen before. This is leading to disruption, chaos, panic, fear, hysteria, and a turbulent economy and marketplace. How do you protect your wealth in a turbulent world? How do you invest for cash flow in alternative assets to escape the rat race in times of uncertainty? How do you decentralize yourself, your family, your community, your business, and your investments to become sovereign and escape the matrix? If you are looking for strategies, tactics, and techniques to escape the rat race and matrix, you are in the right place. My name is MC Lobsher, and this is Cashflow Ninja. This is Cashflow Ninja. I'm MC Lobsher. Thank you so much for joining me for another episode and spending your most valuable resource, your time, once again with me on the show. Everything Cashflow Ninja is at cashflowninja.com. That's cashflowninja.com. We've got over 1,000 podcasts, 4 books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. I've got a fantastic show for you today. I'm joined by Francis Hunt. Francis Hunt is the market sniper, the crypto sniper, and the reset sniper. Francis, great to see you.
Great to be back with you, MC. How's things going?
Fantastic. And, I've been looking forward to our conversation. I wanted to get your take on what's going on in the markets. What are you seeing out there around the world? And what are some of the things that we should be thinking about? But just for quickly, before we jump into that, can you just share quickly who you are, what you do these days? Because we've got a number of new listeners and viewers.
100%. So first of all, thank you for having me on. We're the market sniper, the originators of the Hunt Volatility Funnel method, which is an approach that sets up investments and long-term trades. We're not day traders that exploit things that we see in the market, and the charts are in fact the footprints in the sand. It's allowed us to make very big, not everybody wants to be a chartist, they don't even know what that's all about. It might sound quite voodoo to them, but it's allowed us, utilizing HVF method, to make incredible predictions, which have included 2 collapses in the Euro Swiss franc, for example, right back from 2009 that preceded the geopolitical events of the Greek crisis. It's allowed us to make 2 mega calls on oil in 2014 and again in 2019 that rolled into the 2020 CV19 event, saying single digits will recur. It hadn't happened in multi-decade of time. So we've got shorts that we called there, which was also a gold long oil short, so that we were commodity neutral trade. Many people don't realize that. It's allowed us to overemphasize precious metals the last 6-9 months and say that we were going to get a macro triggering event, which recently just occurred as part of the September, October, November quarter on both silver and gold on charts. I'm happy to share with your audience that has said this is cyclical and it's a mega bias. The other big call that most people don't think of as a big call that I have to keep reminding them was the 40-year turn in the bond market. It was the first time we made a macro call on the bond market, and we said at August of 2020 that the debt market has turned irrevocably, and that this is the beginning of a debt fiat-based systems collapse. And we said that 4 years ago. And since then, we have been joined. While people like Raoul Pal was, buy bonds, wear diamonds on the dip and the pullbacks at the time, and everyone was expecting a pivot, and everyone was pivot calling. Now, today, we sit with the likes of Stanley Druckenmiller saying he is 20% of his family home office short long-term debt. A call and a trade we made 4 years ago. In short, HVF method and charting has brought you Stanley Druckenmiller's trade before he even knew his own trade. And if you think Stanley is just one guy, I can tell you
Paul Tudor Jones.
Thank you for helping me out. my dyslexia combined with my early onset Parkinson's is playing tricks in my mind here. Anyway, so we joined by people who effectively, they aren't following Francis Hunt, they wouldn't know who the hell he is, but have effectively followed us with the news before the news. And the only way you get the news before the news with the big money moving is you learn HVF method and you trust the charts and you see what's going. So we had cruise liners crashing with the oil price crashing, and we didn't understand how that would be. But we shorted Carnival, and we shorted oil, and we shorted a pipeline company. And then we found out why the biggest input of costs for a cruise liner, which is oil, which should have made the cruise liner go up, why it wasn't happening. You have a bunch of old people, very susceptible to respiratory. Let's not go there where its source came from right now, but you all have your opinions, and you put them all in a tin can and float them on the sea miles away from a hospital. That business ain't doing well in those times. And so we got our reason why, even with the oil price down, the cruise liner was also a short. And this is how things work. In short, we don't know anything more than anybody else fundamentally. The difference is how we interpret the charts, and we expect to get the news only after the trade is already well into its fulfillment. And that's how it works. People who trade news lose. People who are ahead of the news win. And right now, it's just starting to break that the debt markets are kaput. Now, that worries me because we probably, and we'll show you the US 10-year. In fact, maybe we should do it now, because we can tell you fundamentally, for people that are listening to this, debt markets are a big yawn. They don't understand it. Everybody understands Coca-Cola, Nvidia, business makes chips, business makes sugary water and poisons you. You know, they get that. But bonds are like, it is the underpinning of a financial system. For those that hold pyramids up in the sky, it is the bottom layer. Money is borrowed into existence. There is not a saver on the other side of you borrowing for that hyper-valued Florida or Vegas property that gave you his money, and there's a bank as an intermediary. They created new money by doing this. So we've borrowed so much new money. The crash in debt values will also be joined with a contraction in the corresponding fiat contracting down. In short, to my American friends, as you are a South African and an American citizen, to my American friends listening, we love you, you're great people, but it's going to get dark. It's going to get terrible. And you're free to step out of it. And everybody I say to this says, I'm never leaving. I'll fight to my last against your invisible enemies. I'm afraid these weapons that are being brought to you are not the traditional ones that are sorted out with a 9mm parabellum. These are cultural Marxism. This is taxation, excessive taxation due to running out of income. This is currency depreciation on an epic scale in an environment with super high interest rates, which is how they deflate down the debt value. What people don't understand, when Volcker raised the rates to 20%, he killed the value of all the debt that Nixon and before him, LBJ, borrowed into existence during the Vietnam War because America blew their stack. They dropped way more bombs and munitions than they expended in the Second War by a huge multiple. The only reason you don't hear about that is because Southeast Asia, somewhere in a place called Vietnam, isn't as close to home as Europe, France, UK, etc. And in actual fact, he blew that, and at the time, the US was around 30% debt to GDP. He forced rates right up at one point to 20%, and that's how he killed the value of that debt. People who were bond holders during that period died. You had negative real rates, negative real returns for an extended period. The capital value was lost. The interest paid was well below the current inflation rate on their statistics, which is a BLS-based lie, on an ever-shifting basket that they manipulate to suit their reasons. And as a result, it's going to be very similar, only significantly worse, because now you start at 120% debt to GDP, and you have not even included your unfunded liabilities, which some professors in Boston, not me talking, have put well beyond 600% in terms of Medicaid welfare. So they need less of the boomers now that they're going to be withdrawing from the financial system, having contributed to it. So you can draw your conclusions regarding recent medical interventions and their effects as much as you like, you conspiratorial person. And they need to devalue that promise of payment. So the currency buying power will continue to erode. You'll get your promised 3,000 pension, but it'll be like living on $600 when you were a student in terms of living standards compared to what, say, $3,000 would buy you today if you're a teacher on a pension. And your Medicaid, they're going to walk away from their benefits. So Americans are looking at 2 or 3 decades, in my opinion. I'm talking about 25 years that can span 3 decades. It's going to be far worse. That if their stock market performance will undervalue. That doesn't mean it doesn't nominally go up. That doesn't mean I'm calling a crash tomorrow. That it doesn't nominally go up. In real terms, over the next 3 decades will be terrible. And in fact, the first could be one of the worst, because we'll have a serious downturn, and your debt valuations. So everything to do with the 60-40 portfolio, which became this grand financialization of everything portfolio, where in the bad years of equities, your bonds were going up because people were afraid. They moved into the more stable, boring assets that got bought up with the flight capital from the equity markets, and you were still receiving a reasonable interest rate. They ran that interest rate in that 40-year bull market all the way down till it was negligible interest rates. And everybody became, wow, every time you buy the dip on bonds, your capital gains keep coming because they just get more valuable. And then we had that super spike moment that was associated with CV19. MC, and that was unbelievable. And that was the end. That was a complete end to this entire process.
One of the things that I just wanted to make sure that everybody is getting from our conversation and what you're sharing is, while most people focus on the equity markets and the real estate markets, that's just the average person focuses on those 2 markets. So they look at those 2 markets and they go, okay, everything is fine. It looks like the stock market's going up. The real estate market is still, hanging on. I know it's very localized, and there's micro markets within markets and so forth all around the United States and the world. But for the most part, it looks okay. What you're saying is, look, the biggest market on the face of the planet is the bond market, the debt market, and it's not even close. And this is where you're seeing that there's massive issues right now. And that's why a lot of people are saying, well, gold and silver and Bitcoin, and not fixed income assets, as Paul Tudor Jones put it, is the place to be. But you've been talking about this probably for a long time now, that this is what's busy happening. So I just want to kind of set the table there for folks that what Francis is saying is the big threat to everyone is the one that you're not looking at and not seeing. And that's the one in the debt markets, because we are in a debt-based monetary system. So in this process of making all these promises, you have all these aging baby boomers that are now going to come back, and they want all of the things that were promised to them. They want to live out their quote unquote golden years. And so they're up for that. But everybody's bankrupt, basically, that have made these promises. And then we also have a lot of other issues happening. So I just wanted to set the table there before you go into the charts, because, you've showed some great charts when it comes to gold and Bitcoin and what's happening in those markets. But I just want to share where this fits in, because otherwise we get just too lost on just the gold or just the Bitcoin. Big picture, it's the debt.
It's the debt. You're absolutely right. And well done for simplifying it and distilling it for your audience, because people do get confused. They see silos of different asset classes: equity, your Airbnb portfolio, if you're a real estate investor, or a block of apartments with an HMO that you own, or some people that are just small and they just have one extra property that they're letting out. And these asset categories are not silos. They're dependent on interest rates and borrowings, and that brings you into the bond market. You're participating in the bond market. Right now, the 30-year bond rates are actually higher, are creeping and making new highs for new buyers. So if I came over to the States and wanted to buy your property for me, I missed the rate that I was being quoted. It might have been 5.75 or whatever or beyond, but it'll also depend on credit rating. But these are going up despite the Fed cutting by two basis points. In other words, 50 in total, two cuts, essentially, which is typically 25 basis points. And what the market is actually saying is, we see inflation. We don't want this debt. This debt is overvalued. It needs to be devalued. And by the way, that was quite political. The Treasury avoided releasing a report when they were due to release a report on their deficit spending. They're supposed to on a certain date. It's kind of like reporting your earnings as a listed company. Only government doesn't get censored if they don't perform. And they failed to say, this is how much income we got, this is how much that we've got, etc. They finished, their year end is September 30. And the minute September 30 was in, that they could say, okay, that's our deficit year and what we've done. They put 500 billion through in the first 6 days of October. And that's where all these charts are that you're getting this bump. So you'll get the new money creation effect on the stock markets and assets, which is very supportive for the election because people feel good if assets and new money is being released, but you won't get the number in this last year's number. It'll be on the person who gets elected's balance sheet for the following year, which of course you'll have a new president for. So there's a lot of political gerrymandering going on as well in terms of all of this. But I'm not interested in the politics. Neither person can and save the 747. So I've used the analogy. I've put you in a 60-degree dive into the Andes Mountains, or let's make it the Rockies because we're talking about America here. And we're doing 747 speeds. We're doing 590 miles an hour, or whatever that is in kilometers, whichever you are. And we found the best pilot in the world. Let's say Trump is the best pilot in the world. You think he's got all the right principles or whatever the case may be. But what I've done as the person who's created this intentionally collapse situation, I am suiciding myself and everyone on the plane, is I've jumped up as pilot from the controls and said, okay, you can have your guy, whoever your hero, your best pilot is. But I've done that literally a couple of nanoseconds before this near vertical 747 dive is going on with all the citizens of America on the plane into the Rockies. And, it doesn't matter that Trump's an amazing 747 pilot. He can jump in that seat and pull back on that stick as hard as he likes. We're about 3 or 4 meters away from the rock going at 850 kilometers an hour. It's a preordained mathematical fact that you are in a debt-based collapse, and it ends in a couple of ways that we can discuss. And I can tell you which one I think it goes for America. It doesn't matter who your pilot is. It doesn't matter who your jockey is. If I give him a donkey, he's not winning the Durban July. It's how it goes. Or the Kentucky, what's the famous horse race in America?
Kentucky
I know
Derby.
Kentucky comes in.
Yeah, Kentucky Derby.
Yeah, so I'll throw as many metaphors as you're happy to eat, but it just is, it's an impossible situation. It's mathematically impossible. So it's 100% crisis, and neither of the candidates are even discussing this economic fact. So neither of them are particularly economic. They'll go, but Trump's a businessman. Kamala doesn't understand anything, it's quite clear. And Donald Trump, we believe he understands business, but there's quite a bit with Chase Bank, that bailed him out of the property market that may point to otherwise. Let's leave that out. There's no solution in the political system. You're sitting there and you're accountable for your own outcomes as a self-directed libertarian person. And actually, my harshest advice that nobody wants, and my American friends will hate me for this, make sure you hit the like MC button and the hate Francis button, but I think you should leave. That's what I'm going to say. For those of you that will hear that and say, I'm not leaving, I'm staying and fighting, I wish you the best, and here's what you should do if you're electing to do that. But I will remind you that America is a nation built on people who left. They left Ireland, they left Poland, they left a potato famine, they left terrible European monarchies that were overarching them. They left over-taxation, they left everything and sought liberty and the escape from draconian tax systems, etc., etc. You were the original liberty seekers, much like the Boers in South Africa that are Huguenots and Dutch that left the same nations, Holland, France, and Irish as well to a small degree. And America's story is the same. And you can leave again because you should go where you treated best. And you're not going to get good treatment because they are in a circle spiral that is preordained flight path, which brings me back to the 747 into the Rocky Mountains. It only ends, and they're going to keep doing it. It's going to lead to rental controls, all the old communist tricks, ever escalating taxation because they can't get the money. It's going to get more expensive to hand back your citizenship. You already have an exit tax if you're leaving America and you want to rescind your citizenship. And in California, you have a state-based exit tax, and the rest of the countries are going like California. Many of them are also bust. I was talking to a number of other lovely American guests that were giving me the update. Municipally, you are bust. State, district, municipally, corporately, personally, and at the national level. Everything is a bust. And I say that with a giggle because we've got to just laugh our way through it. It's not because I'm mocking. It's not because I'm at some better place and I'm glad. I'm saying this because the bigger the bust, if you position correctly, the bigger the crash, the bigger the opportunity for those that are positioned accordingly. And I've begun that positioning, and I want all the Americans, the self-directed libertarian people of America, to understand the game and the journey path of what's coming, because there is a 747 smash coming. It's irrevocable. It doesn't matter who's in charge. And as a result, there are ways you might improve your chances of recovery. So how do you get to the back of the plane? How do you get a parachute and jump out just before the impact? All of these kind of things. And there are those things. You have to recognize that anything that's involved in the financial leveraging of the system, which actually includes property, is going to stagnate. That doesn't mean in nominal terms, again, that it will, I'm only saying it will only go down. It can actually go up, but in a real terms to the true inflation and the interest rate environment, people's affordability of homes is going to go down immensely because we are going to face interest rate spikes. You've already had a cut, and the 10-year, I started off showing you the gold chart here, which is your saving grace. It's one of your great plays, and the more the destruction on the one hand, the greater the pump on the other hand. It's a pump, but it's actually retaining its value. It shows you how much everything is losing its value. It's your insurance policy. So you can over-insure the system for crashing into the mountain and get paid more than your net worth in the response. And how do you do that? Precious metals is one of the key things. But I'll just bring up the 10-year note, which is the standard bearer for debt in the US. This is the yields. And this is what's happened. This is why I say we don't listen to what people say. We come to our own conclusions after seeing what they do. And how do we know what they do? Well, unfortunately, unlike Mossad, we haven't bugged everybody's toilet, bedroom, etc. We have to watch what goes on the charts to get to our own conclusions. But you've had 1, 2, 3, 4, 5 candles and a 6th candle that have all largely been going up. There's not a single red candle in there, and we're talking about a weekly chart here. So you've had 6 weeks up in spite of a very well-flagged cut coming from the Fed being announced and it being delivered. They didn't disappoint. They didn't do 0.25. They did 50 basis points. And what's actually gone on is you've worked your way higher, and you're sitting right now at 4.273. Now, if you need to do a long-term mortgage with this inflation being the key theme, you will realize that the cost to do that finance is going to be very, very expensive. That means the affordability of your current home, your current price is too high, because the person you need to sell it to, A, is going to have a very shaky job environment. There's going to be much more unemployment. There's going to be much more corporate tax on everyday corporations. There's going to be much more personal tax coming down the chutes. You've also seen the unrealized capital gains, which is basically a license to for thievery, being mooted by the Harris and Yellen brigade. All of these things. And people say, yeah, but that won't get in because Trump's going to win. No, 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 no. They're all telling you how they're thinking, and it could get in at later cycle. But the key thing is you're definitely going to get taxed more. So you're going to get taxed more. You're going to have more inflation. How are you going to cope? Your quality of living is only going to go down, and you're already not living in your own means. Most people are using credit cards for groceries, etc., have 4 cars. They're losing immense value. You have a subprime car market. You have all-time highs on credit card debt. I mean, debt is going to be losing in value because lots of you are going to be going bankrupt. And this is not going to be a very joyous period economically. And unfortunately, it rolls into suicides rates, pharmaceutical use, and everything. I'm like, you don't have to do this experience. You have to have the courage to go somewhere else. And every other country feels like a lesser country when you live in the US. And I'm here to tell you, it's the trend you have to measure. You've peaked and you're going down from a very high place. Love visiting the States, love shopping in the States, love doing everything in the States. I'm not here to knock or hurt your feelings. But other places that appear at a lower standard of living are on the right trend. And the key thing is you can take all the up bits by repositioning. For those of you, which is most of you, who will be staying right where you are, you need to cover against this asset collapse. You need to expect greater taxation. You need to somehow set up your affairs that you will have some degree of tax shelter, because it's going to get very, very high. You should probably serve yourself in as much as food, getting localized, farmer, semi-rural, away from the social crisis. The crime levels in America are going to go up. This is such a geopolitical story of social upheaval, hunger. You're going to have a burgeoning homeless class that is going to be, one of the major income groups, the no income group. The under the bridge living income group. It's not just going to be San Francisco. People and the corporations, the retail is wrecked, the consumer is wrecked, yet the stock market goes higher. And the key reason for that is money is escaping the debt market, trying to find a safer place, because everybody's finally worked out that the debt game is up, that we told them 4 years ago. And this was the event. Just staying on this 10-year, I'm just going to show you that event. Of all our calls, I think this is the most significant, because as I say, all the YouTube influencers I follow, most of these hedge fund managers, nobody saw it or called this as early as us. It sounds a bit braggart. We get a lot wrong. I don't mean it to sound like it. I'm just saying this is the most significant for other people. Call. This is going to change your life, the fact that we said this. And the more time you had to plan for it, which why hearing what we were putting forward early means you would have had more time. This is the bond market yields rate. Please understand that the values is exactly the opposite of this. In other words, when yields go down, the valuation is going up. So if I invert the scale, that's how it's been. You've had a 40-year bull market of buy the dip. Then you had a blow-off valuation like a .com. That was a trend change event. It is typical and understood amongst technical analysts. Major lengthy bulls actually end in a final blow-off. It is quite simple. And in the rate side, a final capitulation. It works both ways. You get a final capitulation. Those that were in uranium markets will know it just bled lower, bled lower, bled lower. And then there was the fed up moment where on thin volume, everybody just capitulated. That was the greatest moment to buy, because that's when the last bull died hard and said, no mas, can't, kanimiani corporal. That's when it all happened. And that's where you were at that 0.33 in rates. And they did such a great PSYOP job of telling you about ZERP first, and then, which was zero interest rate policy, and then actually suggesting that you could get negative interest rates. And people bought that. They say, it's coming next. And I'm like, as long as cash exists, remember why they want to kill cash. Why would anybody ever take a negative interest rate? Would you lend me $100,000, MC, and I'm going to, on the basis, I will give you 93,000 back in 10 years' time? Wouldn't you just rather withdraw the cash if you had concerns about your bank and just put it under your bed and have 100 grand and get a whole 10% more than what I'm offering you, and actually be able to count it every now and then and not hope that I might disappear or counterparty rug pull you? So this is a trend change in interest rates. These were all continuation patterns. These are all continuation patterns. The falling wedge here is another continuation pattern. I will say we have one more over, a little bit higher, and then a dip. It's not ready to do the major breakout just yet, but it will in due course. So if I just pull us into this time frame, this is my expected trajectory for this. There will be a down leg. And what's happening during this period? It can bounce here, but it could also go all the way down there. And everyone will come out and say, you're wrong on your theory. It's gone lower than when you were talking. I expect we'll have a disinflationary event. So that could be a beginning of a stock market crash. It could be a bank crisis, because boy, oh boy, those banks are wrecked. Trust me, your banks are wrecked. You're sitting with too much fiat. If you have savings in the banks, you should get it converted into physical gold and literally have that which you need for 3 months only, is my take, non-advisory. It's what I'm doing. But so we will have a down leg. We're going to go a bit higher. We will have a down leg, and then we'll work our way back. And this red line is the one that breaks. And then we'll go back to these previous highs. We might surpass it in one go, or we'll get capped again and we'll wind up and form another move, but we are going higher on the long term. So if you ask me where we are in 5 years' time in rates, significantly higher. But we've got a little bit of a technical structure that has to play out in this falling wedge. So we're going to be up a bit more, we're going to then be down a bit, and then we're going to squeeze, and we're breaking that red line to the high side. And that's going to be most uncomfortable. Mortgage rates are going to go much higher. Your future buyer of your home is going to have much less monthly disposable. More will have lost jobs. It's a smaller demographic than the boomers. So there's a smaller buyer pool. They're going to be poorer. They're going to have more tax, and their interest payments are going to be a bunch higher. So that is why real estate will not be a good performer. That is why the debt markets will not be a good performer. They're going to pay below inflationary rate interest, but it will continue to go higher as the inflation rate is received higher. The cost of living is a large part of it is the cost of homes. So with the lack of affordability on mortgages getting higher, it feeds also into that inflation number. Rents will need to be higher, for otherwise landlords will exit the market. It's no longer sustainable. So you're going to have a divestment, stagnatory environment on a hyper overvalued stock market. That's, again, not an immediate crash call. It's going to stagnate. There probably will be some crashes at some point, but you're sitting, Scott McNeely said, I never asked for my company to be 10 times sales, Sun Microsystem. It was shocking. People kept throwing money. We can't, we have lots of expenses. Why would you buy us on 10 times, assuming we had no expenses at all, no tax, no salaries, no, printer cartridges to pay for, that we were 100% profit? Why would you wait 10 years to get your money back? Why would you pay that price? Well, it was a boom. It was money flushing into tech. NVIDIA today, 58 times sales. And that CEO and his CFO, very early in their listing, were caught by Marco Hodis with irregularities that point to fraud and got us SEC warning. So, how much do you want to overspend with a hype master that has a track record of being a bit fly on the finances? Me, I'm not interested. I'm actually looking for an opportunity maybe for some puts, but that's hard to get the top call right. I'm far more interested in our gold trade. And I want to just take you back to that gold trade. How's it done? The key thing is, fundamentally, we were always pro gold, but we've become a bit of a town crier, a Messianic, a John the Baptist, as I sometimes like to say, more recently. Why? Because of the technicals. It doesn't help to be miles too early. Everybody listening to this will know of some gold bull who's been a gold bull for 20 years. and saw it go down to $257 from $800 in the 80s and sat through the entire financial. I'm not married to gold forever. This is not like I don't cuddle it next to my pillow and all of that. But for the times you are now in, this is the tool. You know, a monkey wrench is a very useful tool, but I'm not going to put it down next to your plate when dinner is served. It's not going to serve the purpose. The tool for the time right now is gold. And it's got a long, long way, and the time runs hard. You've got 40 years of debt accumulation that has gone on and on and on to unwind. And as I say, escalator up. The other part of our prediction on the collapse of the debt market is it's a 40-year escalator. It's a much shorter journey path by time period to the downside. This is here and now. The debt market is every American's problem right now, and they think, oh, it's our dollar, it's your problem. No, it's yours. It's coming hard. It's absolutely yours. Currency and the debt, which many pensions are based on, are all going to contract immensely. And that is going to see devaluation of the currency. How do you deflate a huge bubble? You devalue the currency and you devalue the asset itself. How do you devalue the asset itself? You increase rates. You allow rates to run much higher. What is the consequence on citizens of that? Ever higher inflation. With anything you import, by the way, America is an importer nation on most of its core essentials, from China, from everywhere else. So all your imports, which include a lot of food, a lot of motor vehicles, a lot of other things, are going to get super expensive. This is inflation. Despite being energy independent for now, you're going to find other commodities that you need a lot more expensive, from coffee beans to you name it. So this is you're going to import inflation as your debt devalues and your interest rates go higher. And that's going to lead to not only the debt bubble being revalued down, your stock markets in real terms, remember, will go down. Even though it will go up, the dollar buying power and the inflation that is incurring on it, if you divide that into that, the performance will look far less spectacular. And at these hypervaluations, you would think in a debt crisis, you're probably going to get a stock market crash correlated at some point. So if the 40-60, if the 40 is failing and the 60 is failing, whatever happened to the 40-60? There was always a gold component of old in these portfolios, and they should always be ratcheted up depending on how close you are to stagflation. There is now no justification to hold any debt instruments, in my view. For 4 years, we've been saying that we were a lone voice while people were saying, buy bonds, wear diamonds. And you might recall that. And then everyone said, no, you're wrong. The pivot's coming. It's going to be huge. You've had 2 basis points cuts and everybody is saying it's a mistake. The market's going up. So the cuts will be much shorter and for much shorter duration. And the next major macro moves will be higher. Interest rates spike. Think about your personal finance, what that means. And that's going to affect your payments on absolutely everything. You should remove debt, which has a variable rate, and then long term even look to remove the fixed rates, because they could renege on that and enforce a situation, force majeure by contracts, various, that they can addend their contract when it hurts them too much. You should avoid banks, because this time America is too indebted. So here's your safety. That all this terrible black pill sounding news is also a massive opportunity if you do the right things. There is no crisis that doesn't create opportunity. The Chinese word is for crisis, includes both aspects to that. The opportunity is go somewhere else less indebted. Don't ride the terrible, ride a boom instead of a stagnation. If economics and wealth are important to you, that you care enough to leave your country, learn something new, see something new, and at the same time buy the assets that are designed to absolutely flourish and are proven over millennia to do so, and get yourself into a much better tax setup, because the extractors are coming. So all these are attack vectors that you face. And unfortunately, to do that, if you're American, you need to surrender your citizenship and become Latin American, Indonesian, go Bali, Thailand, whatever. But it's worth doing. So that's quite a lot to consume. Let me let you unpack.
Yeah, so Francis, the gold is obviously a big trade right now. And besides the inflationary trade, it's also when you have a geopolitical situation that we're currently experiencing around the world, where it seems like every day the drum beats for war just gets louder and louder. That also ties into the gold
And what
trade.
does war do
Yes.
to inflation?
Yeah.
You
exactly.
create this massive hungry machine that consumes commodities. People are just realizing how much silver goes into missiles. I had a number for it. I'm a bit. It's faded in my dull brain again. How many kilograms are in the current sidewinders? But it's a shocking amount. It's the most conductive mineral. It consumes copper. It consumes oil. So all of this is going to add to your inflationary pain and create more debt because you haven't got the income to fund that.
Yes.
So, you add all of these things in, there's nothing good that saves this situation. No president saves this. No one pulls the 747 out of the dive at the last minute. It doesn't matter what your skill sets are. It's not within the bounds of physics to make a turn at 90 degrees when you're hurtling at 850 kilometers per hour. So unfortunately, the best thing is actually to avoid the crash and not be in the heat, the white hot epicenter of this hurricane. And you have time to move, but most people don't understand that this is actually happening. And I'm here to tell you, the canary in the gold mine is tweeting its goddamn head off, and it's running like a dog. And the key reason we've been so rampant about talking about gold is the technicals are there. All our technical aspects that we teach have applied. You go once, you break the 2K. Twice, you break the 3K. Fourth time is for real. Once, twice, three times a lady. The lady is the moment. You want to be in there with the lady. What happened? You broke it. You started to support on it. You created an HVF setup. I believe you were in the community and may have traded this with us, by the way. Feel free to jump in. And since that call, that's your risk reward with a little bit of leverage. Making money like a bandit, turning those profits into gold ounces, which are making money like a bandit too. Money on top of money. Judicious, very tight risk control. Look at that red area. For asymmetric trade, this is the way of Hunt Volatility Funnel Method. And conversion of profits to your base reserve asset that makes you a sovereign liberty individual. Gold. Put it in your pocket, walk off with a kilo of gold. The profits that I've earned on this trade, trading within the gold, is buying me more gold and silver. And we've had a triggering on both. This was a key moment right there, MC. And you may recall when we were trading it.
Yes. And then the other question that I had for you, so we're looking at gold, the other kind of part of this equation, which we mentioned, Paul Tudor Jones just shared this too, is Bitcoin. What are you seeing on the Bitcoin charts?
So, not yet the same. Not yet the same. Let me get a slightly cleaner chart. That's a very busy one and kind of messy. Not yet the same. So I want to say our priority, and you'll know because you've listened to a lot of my updates as being a community member for an extended period as well. I talk about the anti-fiats. You need to position in the anti-fiats. That's the anti-debt and fiats. Every time I say fiat and currency, remember currency is borrowed into existence. That's the problem that gold doesn't have, is that the two go hand in hand. The currency is borrowed into existence. So when you have too much currency and debt, it's the two you have too much of. They both take turns in devaluing. Yeah, that's how you bring the whole bubble down. They both have to go down. And they do so because they've been over-proliferated. So gold is the king of the anti-fiat category. It moves first. Everybody sits at the table and waits for the king to stand up. That's the order. That's who's boss. Gold is king of all anti-fiats. Crypto is one subset of anti-fiats, whilst precious metals is another. Don't forget, you've also got silver, platinum, and palladium. We bullish the lot, and they're all starting to turn. Silver, we've already mentioned, is triggered. Miners is also going to be in there as an equity that will outperform. For those that are very equity-centric and don't want to leave the equity markets, they're comfortable with the platforms. You want to look in the gold and silver miners, we've got a number that we're mentioning that are in HVF setups, how far they go, where the targets are when you take off. But your question is about Bitcoin. Crypto is one of the circles in the anti-fiat circle. It's one of the smaller one by market cap. But Bitcoin is the god market of the crypto bubble, the subset. So it moves first. And this is what most people have got wrong in this crypto market. The big call that we made, that we traded on reasonably well, but not as well as we should have, I would say, is the fact that Bitcoin was dominant. Everybody wants to pivot. We've still done better than others, I feel, because everybody wanted to pivot into alts straight away. They're all going into their favorite project. And what you've actually seen since this bull market turned, and 2000, it turned at $15,000. I just want to get the date of when that happened, BTC, and bring it back to this chart. So let's show you that Bitcoin dominance again. This was when Bitcoin bottomed at 15,000 from its last bear market and started going up. Then the ETF talk, BlackRock, etc., brought it up to 73, and then it's been in this broadening structure. We'll go back to it in a minute. But throughout this crypto bull, which has been bullish for Bitcoin, but a lot of projects have been left behind, the dominance has gone from around 39%, and you're knocking on the door soon of 60. So you're talking sub 40 to 60. The person getting all the money, the honey badger eating all the sweet stuff, remember its market cap started much bigger than these other projects, has still eaten 50% more. Just to maintain its own proportionality, it would have had to eat a lot to hold the 39. It's eaten so much of the new money coming in that it's grown 50% bigger, and other projects haven't got close to their previous all-time high. So the big story was you needed Bitcoin. The maximalists will love this. I'm not a maximalist at all. But the fact of the matter is they did better so far, and you haven't got close to any form or a sign of a real alt run without a few exceptions. So you've had a couple of rippers like Ton and all of Sol, as I've mentioned, and one or two others. So most has lagged. So going back to Bitcoin, we do think that corner has turned, and that this serves as a role, some form of a role for them. So when it does get really motoring, it's quite likely to, like before, as a smaller market cap to gold, likely to do a higher performance. But people have been sitting since March in this structure here, which is a broadening structure, and we've just had a seminal moment where I would argue you've started to trigger your break. And as is typical when you break out of a broadening structure, it's not an HVF setup. It is a broadening, we call it a megaphone. It's a descending megaphone. That splitter line is pointing down that I just drew, the thinner line, and it is on a bull market. So we've written all the theory for this, and we tell you that this is actually a continuation pattern. That's it. Now that is a triggering event there. So you have broken, but it's inched forward and it's still playing. You haven't got into what we call the melt up moment with the real power, but we do feel that that will be coming, but we expect that it's going to probably be immersed in something political. So if I was a guessing man, I would say Trump probably gets in, and there's some sort of development about treating Bitcoin as a reserve asset of some significance. And that will then see BlackRock as being super smart about launching an ETF and lots of inflows, and you go for a next round move up. But again, as long as dominance is heading up, you should start with Bitcoin. And that's the same thing with this bull run on precious metals. Gold, gold, gold. Even though silver's put on its shoes now and is starting to trot, it's still well behind. It might start catching up and outperforming, but we watch the gold-silver ratio for that. So you start with the king in both categories, and Bitcoin and gold are the kings of their respective category, and gold is the overall king, and that's why you've got the best performance there. You rotate slowly and you introduce a bit of silver, you introduce a bit of platinum in a moment and some miners, and at the same time you start with some Bitcoin. We have one very special token that's an alt that has actually been doing rather well and is in an incredible setup. So we have a very simple on the crypto side. I'm almost like Bitcoin and that alt, and it can make up a really simple constructed portfolio. Now, a lot of people will be watching us, and some of them will barely, they might have $10,000. What do they do? And I would say 8.5 in gold. And this is non-advisory, by the way. It's a simple guide. But if that's the extent of where you're at, 8.5 in gold and 2,500 in a combination of Bitcoin and that alt, which I'll tell you, if you don't know what that is and you're not in our community, just do the Bitcoin. Because you've got the two god markets of the alternative financial systems. And this is why gold is outperforming oil, for example, and we're actually short oil. Everybody thinks, okay, so I go long commodities. That's lazy by asset class. This is a monetary system failure, a debt and fiat monetary system failure. Go long the alternative monetary systems, some would say the original monetary systems, gold, and the future potential one, Bitcoin. Those are the lead stags and liquidity in those categories. So you would have had a good bull market if you got in at 15K and you're still holding even at 65, 66K today. You'd still be significantly up on your Bitcoin, although you've had a boring March to October, 6 months. But if you had the 85% gold, that 8,500's already put on close on 40% for the year to date. In fact, gold traded 1984. Interesting number in February. So, you know, that's wow. That's a long way away if you're sitting at 2,750. Talking about 750 plus another $16. You're talking 775 on top of 19, less than 2K. That's a big move. We're not far off 50% if we get to 3K. On that move. I do feel that's a sensitive point, though, for the Fed. So we actually have short-term targets where we would reduce our leverage and take a little bit of profit, and those are in and around the 2.890s as you go into 2.9. We think that's going to be a very bad sign for reserve banks to see something that was sub 2 in the year trade 3 in the same year. I don't think they're going to like that. So that's why we could get a disinflationary event, which could bring that one more time the interest rates down, where everyone will come and hate on me for saying the interest rates go up, not realizing I'm talking time frame. 5 years, 6 years, a lot higher. Inside of that, first down, and then a breakout back up to the 5s, and then later well through that. And by the way, if you get to 10, I would almost say it's impossible. But Porter Stansbury was doing some mathematics. You'd have to choose between funding the military-industrial complex or the welfare and Medicaid system. Such would be the interest payments on the debt. So at 5, you're at around 2 trillion. And the best year ever on income, ever, was approaching 5. Most of the time, you're going to be doing 4s. So you'll be at 40 to 50% just on one line item. And who's that going to? The banking cartel that you gave the license to borrow the original money system into existence, for which you agreed to pay an interest. So the tertiary extractors are impoverishing you and handing back inflation. You are paying protection money for your financial system to a cartel of bankers that were given the license to create money on your behalf instead of the country doing it for itself. Think about that for a while and then decide whether you should be loyal, whether you should be paying your maximum tax, or whether you should do something for yourself. Look after yourself, your family and friends. Your government is not your friend. The statists and the people behind them and the secret services are not your friends. You don't get to vote them out. They are set over you. Go to a smaller place that hasn't afforded to accumulate so many black suits that are actually living off you like parasites, and thereby have lower tax rates. And many of them are ex-communist nations, by the way. You could go to Georgia and get Georgian citizenship. We're helping quite a few people in our community on these reset topics, as well as investing in gold. You could live in Thailand, you could have a bank in Georgia, you could move around, and your tax bill will drop unbelievably. For Americans, you might need to cede it's a bit more complicated. You might have to lose your citizenship along the way, but it depends. I think you have 100,000 limit, which is going to get ever less buying power in it. I don't think it's going to increase very much, and you're going to find that the buying power of 100 grand used to be a great salary. Actually, I'm earning 100 grand a year. Nowadays, it's barely getting ahead.
Yeah, Francis, this has been fantastic. I appreciate your insights and appreciate the update on gold and of course, Bitcoin and what's going on as far as the debt and how people can protect themselves from this. Where can people follow you? Where can they stay in touch with everything that you're updating? You're updating daily on social media, sharing some insights. Where can they follow and stay in touch, and where can they learn more about your community?
Yeah. So first of all, don't get depressed by anything I'm saying. What I'm saying is there's an obstacle course to be run. You can have all the right equipment that makes it a whole bunch easier, and you win a big ass prize for finishing it and actually come out wealthier, richer. You got to do something. You got to flex. You're going to burn some energy. You know what? It's good for your health, running an obstacle. If you know it's coming, you're prepared for it. You know where the traps are. You avoid them. You take the easiest lines on everything. It's like riding a mountain bike on one of those extreme circuits. You know, just don't fall and have a crash. And the way you do that is you don't make any of the obvious mistakes. And in fact, by playing a blinder of a game, it's going to be a polarizing event. You could get significantly wealthier by nailing this. You could have floundered your whole career, and this could be the single thing that if you just take good advice and play the eclectic, non-typical financial advice, you can kill this. But you're going to have to be prepared to be flexible and move and do certain things. So my goal is to give you that map and to tell you as it's changing and shifting how to adjust course throughout that. That is the market sniper using HVF method, our bespoke charting that you'll learn a little bit about. There's brilliant recorded material for you to watch, but you'll also watch us implement and make our calls in. It's not a perfect thing, but on the bigger time frames, we've been very, very accurate. It's easier to be accurate on the macro. Things don't happen by accident over months and years. And this has been our positioning. So follow the YouTube channel to find out if you like what we're all about. By the way, in the YouTube channel, in the footnotes, there's a mini series. It's a course. It's a free course for you to learn a little bit about some of the things I'm talking about. Go register there, have your free course. It's totally on us. It's been nicely put together. It's entertaining, well recorded, and it'll bring home a few core principles. So go to our YouTube channel, subscribe, grab the free course. None of that costs you anything. We never sell a list. No one's ever received spam on account of giving us an email, so use one that you use. And you'll get delivered a video a day for a short period to help introduce what we are about. Also watch the YouTubes. And if you like a little bit of X action under Elon, you can follow the Market Sniper and the Crypto Sniper. So we cover crypto as well, and we will be watching Bitcoin's progress during this period. So those are all the call to action. Start with the YouTube channel, grab the free course that we make available.
Perfect. Thank you so much for coming on again, Francis, and sharing your insights and providing so much value for my listeners and viewers.
Absolute pleasure. Good luck with your preparation. We're going on a journey, and you can love it or you could have a terrible time. You get to decide. You are the captain of your own ship. You need support. You need good advice, not the typical advice. And we aim to help it. And you, MC, are doing a great job as well for your community members. And thank you for just, broadcasting and bringing alternative thinkers to your audience.
And thank you to all of my listeners and my viewers for, again, spending your most valuable resource, your time, once again with me on the show today. Everything Cashflow Ninja is at cashflowninja.com. We have over 1,000 podcasts, 4 books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter in the alternative wealth strategy and alternative asset investing space, The Wealth Dojo. You can subscribe to The Wealth Dojo by going to cashflowninja.com/subscribe. Until next time, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.